The Federal Reserve is expected to raise short-term interest rates this afternoon to fight the highest inflation in 40 years. You've all felt it. A recent CBS News poll found that 66% of Americans say inflation is difficult or it's a hardship. The chief investment strategist at Bank of America warned just last month that the inflation shock is worsening, the rate shock is just beginning, and a recession could be coming. Oh, no. Bank of America CEO and Chairman Brian Moynihan joins us to discuss. Perfect day to have you, Mr. Moynihan, at the table. Yeah. So would it be good news if they raise it, for most Americans, if the rates are raised as expected? Because most people hear that and they go, no, 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 please no. And you say what?
Well, that's the tension of it. But the real question is, why is the Fed raising rates? And that's because they're trying to tame inflation. Inflation is worse than a higher rate structure. We found that out through various periods of time. So that's what you have to pay attention to, sort of when rates are going up, why? When they went up in 17, 18, 19, it was because the economy was strong. We'd fully recovered from the financial crisis. They're going up now because, frankly, the impact of the pandemic, even though individuals are still struggling and things are going on, in general, the economy is as big as it was before the pandemic. It's expected to grow at a faster rate. And now they have to take what they call monetary accommodation out of the system to normalize the economy and bring down inflation risk, because if they don't bring it down, then it'll become really problematic.
So one of your top people, though, said that a recession is coming. You agree?
Well, I've got a lot of economists, and I always say to economists.
But I'm talking about your top people.
The debate here is, can they get it right? This is a tricky execution. The employment market is so tight. As the Fed makes this action, it's a hard landing, a soft landing, a bouncy landing, lots of words around it, and that's the big debate. So our economists are more worried that a hard landing is higher probability than it was last year. But I would tell you, at any given time I've ever asked economists, the probability of recession next 12 months is like 20%. So it's not zero ever. And so, yes, we have to be careful. And that's what the Fed's trying to get right. How do I guide this back to normal after all that stimulus, after all that activity, after the recovery? And then they're against two big factors. One is people are spending money today at the fastest rate they've spent in a good while. So in April, our spending was up 20% type of levels. Now, you got to normalize that a little for taxes. Say 15% would be a fair number. That's April, and that's higher than March. That was higher than February. And so people are still spending money, travel, getting out and doing things, maybe not on home repair, like stuff. That spending is good news. Wages are
so the average American who's experiencing hardship, right? We've got all these polls. It sounds like you're saying in the short term that hardship is going to deepen because you're going to still have inflation and the rates are going to go up. So if they're paying a home mortgage or a car loan, that could go up as well.
Well, the people who have a mortgage actually have had a great benefit. So this will only affect new mortgages, and that's a certain amount. So the issue is affect housing prices, and they'll try to bring the housing market back in. Housing prices rising at 20% a year is not good for the people trying to buy a house.
The short-term pain for the average American is going to continue in the next 3 to 6 months, it sounds like.
And that's one of the tricky executions. It'll be hard for Americans who are paying more for goods and services, and we got the impact of the war and the food crisis and stuff and food prices. But on the other hand, the wages are going up fast, and that's the other thing the Fed's trying to deal with, which is the employment market is as tight as it's ever been, honestly. And so that's the balance the Fed's trying to get right, which is to bring those back in line. If they keep spiraling, we get into something we got into that you're not old enough, but I'm old enough to remember the days when the rate structure went up in the teens because they couldn't get it under control. So right now, we're not in that condition. The unemployment's good. People are spending money. That's all good tailwinds. They have more money in their accounts. The customers in April, their account balances grew at Bank of America again. People with $2,000 to $5,000 average balance are carrying $13,000 in their accounts. Before the pandemic, they were carrying like $3,500. So there's a lot of cash. That's all good news. The question is, can this all happen softly? And that's the debate. So, yes, higher prices, but if I hire wages, offset them. But if I get that spiral, just keep going, that's not good.
I would like to hear your thoughts on something that's been a topic of conversation over the last couple of days. The Supreme Court is reportedly planning to overturn Roe v. Wade. There have been reports that major employers, including Citigroup, that they are going to cover travel expenses for women that want to get abortions in other states. Will Bank of America be doing the same?
With all things like this, we look at what our team needs from us. So first of all, the decision has to come down, and the leak and everything that you guys have been covering is tragic in a sense. When the case comes down, we have a group of teammates who'll sit there with our HR teammates and a broader group. They'll sit and say, what do we need to do for our team? So the positions we take on this and other matters is as a company, has to be over what our team needs.
In reaction
I could have
to
a
what
personal
happens.
point of view, but that's not what we do. We go into it and have a view of what the team wants. So give us a few weeks, give us the case has to come out and give us a reaction, then we'll figure out what we do. But this is a tough issue for our team. We have 200,000 people represent all of America.
Tough issue for the country.
Yeah, it's a tough issue, and so we'll see. Let us go to work on it, let it play out for a couple.
Going to work for sure, but you said a few years ago that the role of a CEO is now driving or includes driving what you think is right. On this issue before the Supreme Court of access to an abortion as a constitutional right, do you think it is correct that women should have that access or not?
Look, it's the settled law of the land, and we believe that people should have that access. The question there's going to be a lot of discussion about what this case says and means. But let's go back to when we took a position on guns a few years ago. What happened is the team came to me and said, look, 4 of the 9 victims in Charleston were related to teammates. 2 of our teammates were in Las Vegas. 4 people in the Post nightclub. And I went down to Orlando and talked to them a couple of days after. One of them was a EMT from the military, had been in Afghanistan in war. Said this is the worst thing he's ever seen. Stayed in. They said we have to do something about the high impact crime. It had nothing to do with the Second Amendment, nothing to do with the right to hunt, nothing. And so we took that position because our team said we're doing. We took the position about the so-called bathroom bill in North Carolina. Was our team wouldn't come to meetings because they said they didn't feel safe.
Well,
So
Brian,
you
but
have
you're
to
known
shape
as
it
the
around what they
CEO
say.
that makes decisions that are beyond business decisions. So if your employees and your customers take a stand, is that what guides your decision-making process on these issues?
And we have a lot of people, a lot of stands, but the question is, can our people be effective? Can they serve our customers well? Can they do the things? And that's how we take it. So we believe we have 4 constituents to run our company. We believe profits and purpose. The 4th constituent's communities. I put it in my annual report letter, and that's how we run it. And we deliver for the shareholder, and we deliver for society. So it's not like we go out and find issues to talk about. It's those issues are important to our communities because at the end of the day, a bank reflects its communities. So
what's keeping you up at night, Brian? Listen, for most people, it's gas prices. What's keeping you up at night?
Look, we have.
Before you go.
The big issues are still. We have a pandemic to finish getting through. And every day I have teammates that get this disease, and the great news is that the impact is so much lower. The vaccines were wonderful. The science embedded in that, the work done is unbelievable.
Right.
So that's one. The Russian-Ukraine war does it back up and create a recession in Europe, around the world. That's more of an economic question. And then, then the usual parade of interesting things, cybersecurity and all those types of things that you have to worry about. But what I also have to worry about is do I have the team to serve you as a customer and a great team, and that goes back to how we think about these issues. And we have a group of people who have varying points of view, honestly, right, left, everything, who are good out and come in and we say that we got to do this, and that's how we get.
It sounds like you're watching the way we're watching.
Yeah.
Thank you, Brian.
Sleep tight.
Yes,
Brian
right.
Moynihan, thank you very much. Appreciate you being here.
Yes.